Hello everyone. Today is Feb 19, 2026. We'll be doing the chart analysis of Nifty, Bank Nifty, and a few other stocks. Okay, so this is the chart of Nifty, and we can see that there was a huge downward momentum today. Yesterday it broke out of this range. Today it opened above it and continued selling throughout the day. If you can see the hourly chart, every small rally or whatever happened during the day, everything was sold into. So we do see some like one green candle and a little bit of wick here, but everything was sold into. And ultimately we have this Marubozu candle, which suggests a very good amount of downward momentum. Okay, so let us look at the Bank Nifty now. So Bank Nifty, if you can see the overall chart, this is the resistance line that you are seeing here. Now this resistance line has been acting as a resistance since quite a long time, like since 2021, even before that a little bit. Yeah, since Feb 2021, right? So now every time it has touched this line, it has retraced a little bit. Okay, so that is what happened today. It opened above, almost touched the line. Like these lines cannot be very accurate. It keeps on little bit, moving little bit here and there. But assume that it touched the line and it showed some downward movement after that. Okay, so that is the thing, and this is a very strong reversal kind of a candle. So let us see how it goes tomorrow and the day after. Now this is the chart of gold, nothing specific happening, it is just consolidating in this range. So the range could be, let us say, 5100 to 4500. So in between that it is chopping right now, nothing specific. Silver also the same thing, somewhere around 92 or 93, 92.5 to 70. So that is the range for now. Unless it breaks out of this range, it would keep on chopping between this range. Now we'll be looking at the chart of AUROBINDO Pharma. Now this looks to me like a inverse head and shoulder pattern. So this is your left shoulder, the head, and the right shoulder. Okay. So now this is at a good place where we can buy, but the real momentum will start only after it closes above this neckline. The neckline would be around 1269.70. But if you maybe take a position at this place, then your stop loss would be very minimal, just below this red candle. So what would be the low of this? 1106. So you can keep a stop loss below this. Okay, so this was interesting. DIXON Tech, I think the chart is good. So as you can see, this was the long-term, this is a weekly chart, and this trend line has been going on since, let us say, the start of it, 2017. Okay, so now it has reached this level after falling from 18,000. I think this is a good level, and this is also a good candle, a big green candle followed by a couple of red candles. This looks to me like a bull flag. So a bull flag goes like this. This is the flagpole, and then it will show some sideways movement. before it goes up. Okay. Sorry for the crooked lines, but this is what is happening right now. So I think it would be good to take a position around 10,800 or so, 10,700 to 800, and keep a very tight stop loss below this red candle. So which would be the low of it, which would be 9835. So it would be around 1,000 point approximate stop loss. So that is about DIXON. Now let us talk about KAYNES. I think KAYNES should show some little bit of retracement. A good level to buy would be around the low of this candle, which would be the green candle, 3294. So if it falls below that, that would be your stop loss, but the stop loss would be on a closing basis. And here you can see that this has formed a bearish hammer. Now in this, it could be followed by a couple of down days or red candles. So let us wait before we can take a position here. But this level looks good. If it is respected, then I think we can see some good upside here, because this stock has also fallen almost 50% from 7709 to 3294. Okay, almost 50, more than 50%. Right. So that is about KAYNES. Let us talk about Hindustan Unilever. So right now it is at the support. So this is the overall chart of Hindustan Unilever. But I think that it could break down from this level, because there has been a lot of, this is like a rounded top kind of a pattern, and it could possibly break down from this level. I don't know how far it will go, but the signs looks like it. This is a newly listed company, EMMVEE. Now this has formed inverse head and shoulder. No, not in inverse head and shoulder. It looks like a double bottom. Okay, so let us see. So this is one bottom and this is another bottom, but this is not exactly at the same level. So you can also argue that this could be like a imperfect cup and handle or imperfect double bottom. So we'll have to see. But this clearly looks like if it goes above this shaded area, this would act as a resistance right now. But if it goes above this, then basically above 230, then it could see some major upside. So let us see how that goes. We can take a position here, but with a strict stop loss of 2-3%, or maybe at max 5 to 10% if you are comfortable with that. But because this is, it can fall, I don't know how much it can fall, so we'll have to be strict about the stop loss here. The next interesting chart looks like SBICARD. So it has, let me show you the complete picture. Okay, so it has broken out of this. It has retraced to the trend support. It has done it again. And now I think it is prepared to go up. So I'm a little bullish on this chart. Unless it breaks above below this particular red candle, which would be below 725 on a closing basis, I think that can act as a stop loss. And this is a very minimal stop loss, only 40-50 rupees. So that should be okay. The next chart is Crompton Greaves. So here you can see this, it tried to break out of this chart, but it could not sustain above it. But if it, in a couple of days, if there are some good days on Nifty, then probably it could go above it. And if it stays above it, then probably we can expect some good upside. Purvankara hasn't done much of today. It is just slightly down from yesterday. ITC, it has fallen a little bit, but still above the danger zone. So I think this is going good. We can take a position at this level around, if it touches this line, somewhere around 321. Now this is Tech Mahindra. So we can see that it is trying to gradually moving towards the bottom support. So this is where it is right now. This is the complete chart of Tech Mahindra. So right now it is at that level. This is like a rising wedge pattern. So in the rising wedge, it generally breaks to the downside. So rising wedge is like this. The price movement is big, and then smaller and smaller and smaller, and eventually it will fall down. So this looks like that pattern, and highly likely that it may even break out of this wedge pattern, break down from this wedge pattern. So we'll have to see how that goes and when that happens. We cannot take a position on this right now, but if you are planning to go long, just be aware that this is like a wedge pattern and it could break. And even if it doesn't break, then it will keep on chopping in this range until it finally breaks down. So that is the thing with Tech Mahindra. Now this is the chart of Safari Industries. This looks to me like a head and shoulders pattern. This is the right shoulder. This is the head. This is the right shoulder. That was the left shoulder. It can show a little bit of bounce at this level because it has touched this support, and it can go a little bit sideways like this before breaking down. Okay, so that is about the Safari Industries. This is only for educational purposes. Don't trade without doing your own research, and always consult your financial advisor. I am not SEBI-registered, but you can consult a SEBI-registered financial advisor. Okay, that was it for today. Thank you.